Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we have an interesting action going on in the markets. We saw a confirmed breakdown both in the NASDAQ yesterday as well as the S&P 500. Early this morning, we were seeing the futures down. They've kind of crept back up to be slightly on the higher side. I have chart levels to go through, trade setups to go through today. We'll take a look at Bitcoin breaking down below that $92,000 level as well. And we'll take a look at gold. So follow me over here to the big board. Let's see what the S&P is doing today. And this again just shows you, right? So this was yesterday. We had that steep fall here early in the day, and then we had a decent float up into lunchtime, and then a big sell-off towards the end of the day, essentially closing right around the lows, right? So from the morning lows to the closing lows right here. Then in the after hours, we went sideways. This morning, we were trading down decently on the morning session and have now come back to essentially be flat on the morning session. All right, so again, this is pre-market action. The stock market opens in less than 30 minutes here in the U.S. All right, so that's number one. Number two, here's where we see the confirmed breakdown and the negation of the confirmed breakout. So again, we've talked about this. I've gone over this quite a few times with you guys. If you followed the game plan on a daily basis, we know that we had confirmed above, which was a breakout, and now we've closed here. Yesterday, or 2 days ago, I should say, on Friday's close here, this is your confirming candle right here, this one right there. Now, what does that mean? Well, it essentially means it's a failed breakout. You've now confirmed to the downside. Probabilities do a flip, right? So when we were up here, probabilities were favoring an upside move, continued kind of grind higher. We've now flipped to where probabilities favor further downside. Now, it doesn't mean straight down, right? Oftentimes, when you come down and confirm, you do kind of a trade back to the scene of the crime, and then you get your next move down. Or could we potentially see a continuation today into this trend line here, right? We have a very defined trend line going back there, and at that point, we could see that bounce. And I want to be clear, by no means have buy the dippers run away, but we're seeing a degradation of that. We're seeing more and more institutional selling, more and more economic data that's coming in weaker and weaker. And eventually that's going to take its toll on the market and on buyers and eventually bring the markets to the downside. All right. So again, we'll keep an eye on that, but right now, again, we have a confirmed breakdown, a failed breakout, and oftentimes the biggest moves, remember this, the biggest moves oftentimes come from failed moves. All right, let's get into the NASDAQ chart real quick here. If we take a look at the NASDAQ, we have a confirmed breakdown out of this upsloping wedge, and you can see, again, it was kind of a flattish to slightly downsloping trend line on the tops. Here was your low going back to August of 2024, hit here, and here, closed below, and today, or I should say yesterday, confirmed. So now it says confirmed breakdown, and that again means that sure, you can easily bounce a little bit here, but this now is going to be, this trend line is going to be major resistance. All of this, by the way, coming into Nvidia earnings tomorrow after the bell. Now, I wanted to show you guys the 10-year yield. So the 10-year yield continues to fall, and again, remember, when the yield used to fall, we would see the stock market go up, but now we're seeing it go lower. And again, the kicker here is, as it comes down, it's telling us that we likely have a weaker economy. That is why yields are falling versus a strong economy, but the Fed kind of just readjusting rates. There's a difference there, and it is a very important difference. Now, I do think yields could get a small bounce. I want to show you a cool trend line here. If we take this high and we drag it right through these highs, look at this, guys. Look at this. High pivot to the high pivot here, cuts right through here. And look, the 10-year yield is right on that. So if I had to gauge what I would expect based on chart analysis, you probably get a small bounce over the next couple days. And then eventually, I think we do go lower in the 10-year yield as the economic data continues to show weakness. All right, so now we're going to flip over to HIMS. Now, HIMS here, folks, I'm going to go to the big board to dissect this. And if we take a look at HIMS here, the stock is cratering down below $40 after after reporting earnings yesterday after the bell. Now, this is down about 22% on the morning session. Now, this has been one of the most impressive runners, kind of the cult following plays, the momentum plays in the market. What we can see is that just back in late January, this was trading at around $35. It then ripped to over $70, 100% move before retracing into yesterday's close right here. Yesterday after hours, they beat on revenue, they beat on earnings, but the problem is they're priced to perfection. Even after this pullback, it's still priced to perfection. And so, again, their guidance just wasn't quite good enough, and it's creating a lot of sell pressure. Now, from big drops and big pops, you know what I say? I say opportunity comes, and that's where it comes into here to looking at the charts. And you can see I have a very defined trend line here. All of these tops right through here, right? All of those tops, you stretch that across, and it's right around 35, give or take. It's actually a little bit below 35, but we'll just call it 35. So 35 to me starts to get really interesting on this. In addition, I want to show you one more thing, and I'll have to go back to the computer to do this and bring it up. But if we take a look at the chart here, so let's go to the chart, and we take our fib tool. If we look at this, and I'm trying to remember where I did it from, I think it might have been from here, from our lowest point. So our lowest of the beginning of the big bull run here when HIMS was down right here. You can see how it just went straight up. Look at what aligns perfectly with that level. You can barely see it because the line actually goes through it from over here, but this says to 786, and it is the Fibonacci retrace. So from this low to this high, this is the exact 786 Fibonacci retrace. Now for me, again, as I move back to the big board to talk about this, this is what you want to do in trading, right? So you don't just want to say, oh, well, I like the stock, so I'm going to buy it. I mean, listen, that's a good long-term strategy maybe, because over time we know stocks tend to go up. But in the shorter term, if you're trying to swing trade things, you need technicals and what I call factors. And factors could be a trend line, it could be a Fibonacci retrace, or it could be a gap fill, it could be a topping tail, a bottoming tail. I mean, there's a lot of potential factors out there. But the idea is that if you can get more than one to align at a price point and price falls directly into it, the odds of a bounce at that level are greatly impacted, meaning it's much higher probability. And so that's what we always want to do. We always want to look to align factors. The best you come out, you can get 3 factors or more, you're really probably north of 80% success rate, which in trading and swing trading and even investing, that's really, really solid odds. I think there's hedge funds that don't even come close to being able to do that, and that's the truth of it. A lot of hedge funds, they bat maybe like 60% or so, but maybe at best 60%. But I do believe using the technicals the right way, like I teach you guys, you can get those probabilities much, much higher. Takes a lot of discipline, though. A lot of discipline. All right. Next up, Home Depot reporting earnings this morning, barely moving on the stock. They basically beat earnings, beat revenue, but the market, again, I think was priced in. In addition, look at this beautiful trend line here. If we take a look, you have this high here on Home Depot right through here, and then look at how it connects right through low, and then the low yesterday, and sure enough, we're trading just slightly flat to positive or just above that line. So this continues to be support. Now, if this breaks, it opens a trap door down to this lower line down here, right? So we could eventually, do I think eventually we come down to this line? Yes, but at least in the short term on earnings, it seems to have escaped without too much damage. Palantir, guys, again, when I see big pops, I generally am shorting into them because, again, it's momentum, it's psychology. Here we've had the big pop on Palantir. It's now pulling back. Right now trading at 91.89, so it's up fractionally on the day. But this level is so solid to me. Listen, and there's no guarantees. Let's be clear on that. But as a probability trade, this level between, I would say, 84 and down here 80.5, this to me should, if we can come into this level today, we should see a technical bounce on Palantir. That would be a good level. Robinhood, we showed a level yesterday. It was an upsloping trend line. I said look for a bounce, and sure enough, take a look at this, guys. Look at this. So this was yesterday in the game plan. I had this line, and sure enough, we hit it, and we bounced all the way up nicely. So there was a nice trade there from the game plan yesterday. That level's already been hit. I erase it. Once it's hit, the first hit is always your highest probability setup. After that, it can break, and you just don't want to, at least I don't want to take the risks of that. My next level to watch today is around 46.25. There's a little gap fill right here, this little pivot low. But the big play for me where I would consider swing trading Robinhood would be down around 42.80. Pivot high, and pivot high. There's even a gap fill right below there. There's a lot of support in that area right there. OKLO, guys, this one again was one of the hottest plays with HIMS. It is continuing to fall. Today, pre-market, it's basically flat to lower. Looking at this, there should be also a significant bounce between 28 and 26. Right in there, you can see those two trend lines converging, both major low to low to low to low, and then this high pierced here, but that's okay. It should reestablish itself after it broke out. That'll give us additional support there. Lastly, a couple more to go over. Nvidia is trading slightly higher today ahead of earnings tomorrow after the bell. This was a gap fill I gave you guys in the game plan the day it happened. It was a great trade and also a great swing trade as it did come down after. Watch the 119 level on earnings. If it pops through this level of 142, you likely head up to 157, which is this trend line up here. So again, a lot of people asking me, well, what do I expect on earnings, right? Do I expect Nvidia to dump out on earnings? Do I expect it to go higher? It's tricky because you're kind of in between. You're not really at the all-time highs like extended. Valuation is not quite as bad as it used to be because the stock and the company has grown into it. It's still extended, but again, it's not as crazy. And in this situation, again, I would be a slight negative bias, just slight, with a downside target of 119. And again, we'll see. Right now, it's trading at just around 129. Lastly, Tesla here in terms of stocks, then we'll get into crypto. I'll go over, I promised you yesterday in trading the close, by the way, Solana, I forgot to do it. I'll do it today. But here you can see on Tesla's hammering on this area right here around 327. If that breaks, I think you head back down potentially as low as 270. Once you get to 270, though, that's a swing trade in my book. I'll be looking for a strong bounce off that level. All right. Let's get into Bitcoin, and then we'll get into Solana. The key on Bitcoin, again, guys, I've kind of guided you to this. We've talked about these two levels, right? So we've talked about the level here, which is right here at 92,000. We've talked about the 108,000 level. And we talked about how, again, maybe you had a bear flag here a little bit. It's looking like that's what's playing out. We are now below with potential for confirming a breakdown here. Okay, now, Bitcoin as of now is off of its lows. It has bounced a little bit back, so maybe it can recover. A lot will be determined by if the stock market rallies off of the levels it's at today and rallies higher, meaning risk on. But again, if we really can get below this level and confirm, it opens that trap door to the 74 to 75,000 range. And again, I mean, it seems like a long way away. It's actually the way Bitcoin can move. It could be there in a couple days, the way we know it to work. So again, there's your level there. We know that this was support right here, here, and here. Right all the way through there. That was establishing itself as a major level. Now it's been violated. We have to see if it confirms. If it confirms, probability goes up that it's headed down to about 74 to 75,000. That should be a big support. My only issue with that level is that so many other people are talking about it, and I hate that. I hate when everyone always harps on a level and says, oh, this is where it's going, and you see everyone saying that. It makes me think it's either not going to get there and it'll come shy, or it'll go and flush right through, making everyone look the fool. And so it's just something I've learned over my time in trading is that essentially, you want to find the levels that most people are not talking about, and then they work out. If everyone's talking about something, then oftentimes it doesn't work out. All right, let's go over Solana. Then I promised you guys Solana yesterday in trading the close, and then I forgot about it. I do apologize for that. Solana here, guys, it is coming down. Take a look at this right here. This is Solana's actually into a lot of support down here. All right, now there's a lot of levels, so if it does go lower, I'm just going to draw these in real quick, and then we'll go talk about it. But again, you know, my biggest issue here is that while Solana will bounce, in my opinion, and I'll move back to the big board here, you still have to say that there's risks involved here about a stock market sell-off. And I've always said that, folks. I've said to you guys that the biggest risk to Bitcoin is the stock market. And what I mean by that is risk off, right? So if everyone starts panicking in the stock market, it tends to bleed over into other assets. As many people say that, oh, Bitcoin has nothing to do with risk, it's more digital gold. That's not true. We all know that it's not true. That's why it moves. And Solana's 10x that, right, in terms of volatility. So here was your move in early 2025, right? We saw that big move up. This was that huge pop on Solana. Notice the big parallel channel. This was a great, great indicator. In fact, yours truly right here. I shorted Solana right up here with members of Smart Money Crypto because of this parallel. It was just that simple. Again, I don't try to reinvent the wheel here. I'm just using these trend lines to guide me to where it's overbought to the upside. Look at 1, 2, 3, 4, 5, 6. 6 candles up. That's coming into a time count. And so again, using that with the parallel channel gave me that as resistance. Now again, do I wish I held it all the way down here? Of course I did. I didn't. You know, I think I took 15, 20%, whatever it was. It's certainly not that much of a drop, as it's down now over 50%. But the point being is you're now coming into these lower pivots right here, and right here, where right in this vicinity, you should have some good support for a technical bounce. But I would just caution again is that, again, if you're in the camp with me that the stock market is probably overdone, we're probably going to see bounces in the stock market, but more downside than upside, then this probably goes like this and eventually has another move, might get down to 100, the even number there. The other thing to interest, this is a key point that I've made over and over again. In 2007, there was an IPO, a Blackstone IPO. Blackstone is still traded, but I remember this vividly because I was trading back then. In fact, it was the first year of running the service back then in the money stocks. And when that IPO came out, the markets were at all-time highs, basically. It was so hyped, and that marked the top. Right? It was these type of hyped environments where things go crazy and investors were clamoring over each other to get involved in something like that. And it basically marked the top on the market. Well, you could almost look and say that when the official Trump coin launched, that hype, right? So you had the hype from Trump winning the election all the way to his, I'm not going to call it a rug pull, but essentially the coin there popping and forcing Solana up, Bitcoin up, all of these coins ripped up on the hype. But then what does that do? That excitement essentially is exhaustion. And that is where psychology comes into play, and I've said this before, is that you now have that following as the height of excitement, and now there's this void, and crypto investors are looking around and saying, well, what are we hanging our hat on now? What's going on here? And that creates the potential for people to say, oh, I'm going to sell, right? And then I'm going to take profits. Okay, and then when more people take profits, it panics other people to take more profits, which then panic more people to take profits. And that's actually eventually how you get to lows, is when everyone is panicking, finally you put in a low and it's ready for a reversal. All right. So interesting chart there, but again, Solana certainly into some key support. Let's take a look at gold here and see what we have on gold's chart. Gold today is fractionally lower. It continues to hover around this little support area right here. I still think there could be one final push up to 3,000 just because we're so close. But again, at this point, it's close enough where it wouldn't shock me either way, whether it goes in the short term to 3,000 then pulls back, or pulls back and tries to fake people out and then pushes up to 3,000. I guess my point is it's probably going there either way. Silver continues to stay weak. It was able to chop around here. This candle on silver was very important to me right here. This was an attempt at a breakout, and then it failed. And sure, you got a little retrace, but now look, it's starting to come back in. We're seeing palladium, we're seeing platinum come in as well. And by the way, I actually am a fan of palladium and platinum as investments in the mid to long term. Short term is tricky, but mid to long term, I continue to really like those. And in fact, I'll show you one thing here. So let's take a look at the palladium chart. So I'm going to show you guys why, one reason I am mid to long-term bullish. So if you look at the chart of palladium, it's not a great chart, right? So we have a breakdown right here, which says it could go down to this area right down here. If we zoom out on the chart, though, look at how beaten down it is compared to gold. Right, so a huge beatdown, and while gold is at its all-time highs at 3,000 or just shy, this is now basically at multi-year, almost decade lows. Right now, I want to show you this. This is something that got my attention. If you look at the palladium-gold ratio, and we look at this here, let me bring up this. Bear with me. Not sure why it's not doing it. There we go. All right, look at this on this chart. The palladium gold ratio is basically at its lowest level. So this is comparing palladium's price to gold's price. And generally, you see these metals stay somewhere in a range. A lot of people look at the silver-gold ratio. But in this situation, look at this. I mean, you go back to 2017, you'd have to go back even further. This chart only goes back to 2017. But you are now at essentially 0.32 palladium to gold. And to me, eventually you see some sort of reflex to where, if someone said to me right now, would you rather buy gold here at basically 3,000 an ounce or palladium? I would actually prefer palladium and platinum. And I'm not saying that gold's not going to go up 50 to 100% in the next 5 years. I just think palladium could go up 100 to 200% and play catch up. And so listen, I could be wrong on that, but I do think that, again, looking at these kind of equal factors, palladium's price to gold's price over history, we can certainly see how beaten down palladium, and by the way, it's much the same for platinum is compared to gold, because gold has gotten so popular with investors. Eventually, I always look at it as like a spillover effect. All right, gone to a few other little things today, so we'll just kind of go into oil here. Oil inching down just a little bit. Nothing new here. You still have your support at around 68 and change. And then natural gas, which has kind of been chopping around the last few days, eking out a small gain. This still remains major resistance around 440 here, and I still think we might be forming a bear flag for another rollover. I remain with a short in smart money commodities with members there on natural gas. All right, guys, I got to get to the trading room. We're only about 10 minutes, actually 9 minutes away from the market open. Lots to trade today. Hope to see some of you in there. We also have a lot of other amazing swing trading services on verifiedinvesting.com. And don't forget that homepage, folks, has a ton of information. Like, basically, it's your go-to if you're a technical-minded person who doesn't want hype. That's where the charts are, and it's a lot of free stuff there as well. You guys have a great one. I'll talk to you later. Take care.